to this episode of Insights. I'm Jim Rieniets with INSBANK. Excited to have in the studio today Kim Snyder from KlariVis, Dominick, the Cornerstone advisors, and this is, I think, this is a little unique because Al is more often, the one hosting a podcast on his Plugged In podcast. So this is hopefully not going to be too different today. So, but no, excited to have them in the studio today in town for Bank Director Conference. So, thank you to Bank Director for having our guests in town. So one of the nice things about being located in Nashville is it's often people in the industry are here for one reason or another. So it's nice to be able to get them in. But so we're going to talk a little bit about today about the challenges for community banking, and Kim and Al respectively are I consider change agents within the industry and in helping in similar and different ways community banks face the challenges of the now and of the future. So, but why don't we start with a couple of introductions? So, Kim, tell us a little bit about. I want to hear, both obviously a little bit about what you and your company are doing, but also a little bit about your path to where you're to this point in time.
Yeah, no, Jim. First of all, thank you guys for having me on the podcast today. I'm honored. I don't think I've ever had the opportunity to sit with Al before. just saying. But so my story kind of weaves together. So why don't I just start in the beginning? I actually, after I graduated from college, I started my career as CPA with KPMG. And I was there for a couple of years. Along my journey, I worked for a startup company. After I left KPMG, I had a stop at a private liberal arts college, and then I went to work for a startup company. And that's really kind of where I think I caught my entrepreneurial bug. It's where I realized what it was like to build something from scratch. And it's also where I realized the importance of community banking, because we had a community bank in town that was our bank, and we raised a lot of money. That's where I cut my teeth on venture capital. I didn't even know what venture capital was when I went there. But I developed a very close relationship with our community bank because we were a startup company and we needed help. Like, we needed funding. We needed, sometimes to draw on the line of credit and all of those types of things. And they just really became integral to us as a company. And fast forward, when Sarbanes-Oxley kind of occurred, that bank's CEO reached out and asked me if I would be interested in coming into the banking business. And I was raising a 2-year-old on my own at the time, and I had been on the road a lot. And I thought, yeah, why don't I try that? That sounds like an interesting thing to do. Everybody says you accidentally fall into banking, right? I don't think very few people grow up and say, I want to be a banker, right? When they're younger. So I fell into community banking and loved it. Like, I drank the Kool-Aid every day. We were a publicly traded bank. We were about $400 million in assets when I started there. We grew, endured the Great Recession, paid TARP off organically, and we were about 900-ish in assets, and everybody started knocking on our doors. And at some point, even in today's market, right, I think we ended up selling at 176 of tangible book value. So we were a very, very, very top-performing organization. But that led me to figure out what my next chapter was. And I had always wanted to start my own business, so I decided to do that. So I started a consulting firm working with financial institutions because I loved community banking. I loved working with small businesses. I loved the impact that our bank was having in our community, and I had experienced that firsthand myself. And that's where the light bulb went off. We built a small little boutique consulting firm with I had 10 people that had worked. We had all worked together at the bank. I somehow convinced them to come work for me and take a chance to do this together. And we worked with about 35 different financial institutions over the course of 4.5 years, all different sizes, multiple engagements, and every bank was struggling with data. Every bank. It didn't matter their asset size, didn't matter their core system. It didn't matter. They all were doing it the same way we were doing it at our small community bank, and that's where the light bulb went off, and we decided we wanted to try to solve the problem, and that really is how KlariVis was born.
So you were engaged with clients, and then you were seeing a barrage of spreadsheets.
Yes.
Homemade spreadsheets and extracted data files that weren't usable, and said, aha, there's got to be a better way.
There has to be a better way, right? And so we were blessed that we had this phenomenal group of consulting clients that we were able to kind of test our theory out with. So as we were building our proof of concept back in 2018, which was a fake bank data set in Excel, okay, that we took a visualization technology and layered on top of it, we were able to take it back and forth to some of our consulting clients and say, what do you think? Is this really going to hit the mark, or is it not? And then fast forward, we had 6 of them roll their sleeves up, give me their data without any security infrastructure in place because they trusted me. And
this will be a placeholder for a potential edit.
Right.
Keep this thing in.
Yeah.
Right.
We won't. You will
they
not.
don't know who the banks
I was
are.
going to say you're not going to say any of those names.
No, I'm not. Yeah. I'm not. But they saw the value in what we were creating, and they wanted to be part of it. And so I always say I've been very blessed on this journey, and because I've had a lot of. You don't do this alone. Right? I mean, you don't build a company alone. Yeah. Like, it takes so many people. And I've just been very blessed to have so many phenomenal clients involved with us. And so what we do, sorry, I haven't gotten to that, is, we take the data that's scattered across all the systems that a bank has, we unify it, and we put it in a format to where a lender or a branch manager, the CEO, the CFO, the credit team, everybody can come into the bank and get to the information that they need immediately without having to pick up the phone and call somebody and say, hey, can you write me this report?
And full disclosure, KlariVis is a vendor to INSBANk. And
partner.
So
we're a partner.
Partner, sorry.
I thought you were about to say you're one of the 6 banks that was in that initial pilot.
Actually, let's be very clear. We are a partner, but we were not one of the 6 that, we're part of the risky business.
You can do your Tom Cruise and just slide right in with that risky business thing. One of the cool things, Jim, as you're talking and I'm listening to Kim, like what I have long appreciated from the outside looking in at what you've built. You've got a banker's background, which I think we've seen work in different scenarios. I think about what Numerated built, and that was spun out of Eastern Labs, which is up in Boston, which is part of Eastern Bank. And so coming at a problem with the insider knowledge of, hey, the pain points are not as obvious as an outsider would assume they are, gives you credibility. So as much as we're laughing about these 6 initial, folks that were saying, we trust you, I think you earn trust because you've been in their seat.
Right.
And I think that's like the cool thing as we talk about entrepreneurial stories, like how do people get to where they are? You earn trust over years and years and years. Yeah. And then you have that moment where you have to deliver. And so when I think about the data issues that are going on in the industry, like I think KlariVis is doing a heck of a job in helping people understand it's a big, massive problem, but you can start to attack it in some very pragmatic ways.
That's right.
Yeah. One of the things that I just heard you say, though, that to echo on sort of like how you went about that process and how it's been found success was you said that when you started that you had 10 team members come join you.
Yeah.
I think that speaks volumes. Because I mean, in any successful business, I mean, you certainly got to have a business model that works. You got to have something that's compelling. In your case, it's about helping banks get there, if you will, with data and being able to use it, and so that they're going to be able to address those challenges. But it's also about leadership.
Yeah.
And people follow individuals; they don't follow titles.
Absolutely.
Right. So Kim could have said, "Hey, I'm the CEO of this new fintech. Come join me." And if she doesn't have the currency with those folks, they're not going to join.
Yeah.
Yep.
But it doesn't matter what your title is. It matters
right.
how you're helping others
Absolutely.
to grow and succeed, and then by extension, your clients, benefit from that.
Yeah.
I've always said my greatest accomplishment were my first 3 hires that for my consulting business. I convinced 3 of, they had left the bank. They had gone on to other full-time jobs. Mm-hmm. They had careers of their own. I'm saying, hey, I'm going to start this consulting business, and I've got some clients I need some help with, because I actually was very blessed that I had a lot of opportunity to work with a lot of banks when I started my business, and they left their full-time jobs to come do that. Like,
that's a big leap of faith.
When I look back through this whole journey, that will still, I think, be my personal biggest accomplishment, was convincing them to do that. And I'm very blessed to have them on the team.
Particularly because bankers are generally sort of risk averse
Yes,
that way.
they are.
You don't say.
to be able to
They are?
to be able to post.
Jim, I had no idea.
This just in. You heard it. 2026 on the Insights podcast.
Breaking new ground.
Breaking new grounds. Yeah.
In Brentwood, Tennessee.
I had one success that way that is probably not as much to brag about, but I had an employee that was leaving banking to do a pull your trash can behind a truck to the end of the driveway device, and I convinced him to come back to banking.
No.
So, and I think he's grateful today.
That's great.
Is he your editor and producer?
No, but
He's a good guy, too.
we worked together and we started in this business together 30-something years ago. But anyway.
Wow, very cool.
All right, so let's segue to
We've already jumped
Al.
into this, so I'll try to keep mine shorter. But Kim, you said that nobody wants to be a banker. I actually can raise my hand and say I did, but I wasn't able to. So the backstory here is, I grew up outside of Boston, Massachusetts, at least for the first 13 years of my life, and my dad was a banker for Shawmut Bank. And so if there's bankers who are old school and they know different bank brands, Shawmut was this iconic New England bank that was sold to Fleet. And so when I was younger, I'm the oldest of 4, my dad would take us down to bank branches to help pick up the pink paper slips that ATMs would be spitting out, because his claim to fame was he helped put the first ATMs in the network in New England. And so he'd always been on the tech-forward side of the bank. Fleet comes in, buys Shawmut, and I find out we have to move down to Dallas, Texas. So we moved down to Dallas. My dad winds up working for John McCoy, who was the CEO of Bank One. Bank One was sold to J.P. Morgan. So when that happens, we had to move again to St. Louis, Missouri. My dad is now working at Boatman's Bank in St. Louis. That bank gets sold, so the drill. He moves. I wind up going to college, but he's at Marshall and Isley in Wisconsin. That becomes M&I Data Services, which becomes Metavante. Mm-hmm. He winds up as the CEO of an online bill payment company in the mid-'90s called Intellidata. And this whole time I'm in college, I'm seeing this, and it's a combination of the technology and the business of banking that was really appealing. And so I went to this little school in Lexington, Virginia, and I was trying to figure out, how do I go from a liberal arts school to a actual paying job? And so at the time you had Anderson Consulting, now Accenture, but they'd come on campus and they're like, no thanks, Al, you don't have what we need. Other big brands would come through and I'd apply and I'd get rejected. And so then I was talking to my dad and I said, hey, what about some of these bank management training programs? He's like, everyone's going in a different direction. There's really none of them left. He's like, a few years ago, this would have been exactly how you get your foot in the door.
Right.
At the time, he was running this publicly traded company. On his board was a man named Bill Seidman. Bill is the former chairman of the FDIC. Unfortunately, he's passed away, but for a long time, he cast a long shadow. The reason I bring up Bill's name is I was convinced by my dad to reach out to him to see if he had any jobs that I could potentially do. I'm Al the third, my dad's Al Jr. I wind up calling Mr. Seidman the day before an earnings report, and he thought it was my dad calling with bad news, which is why he took my phone call. And that's how I got my first job, which was at a little company called Bank Director, where Bill had invested in.
Yep.
And so I was asked, as soon as I graduated from Washington and Lee, if I could move to New York City and start doing basically whatever was needed. And the condition was a very low-paying salary, and really not a big job description, but an opportunity to get your foot in the door.
Yep.
So I did that, and I had a great time. We had a business that expanded into different governance areas. We did things with publicly traded companies of multiple industries. We had a joint venture with the Economist Group. I'm in my 20s, and I had nobody, I wasn't married at the time. I didn't have a family. So if anything ever came up, I'd raise my hand and say, I'll volunteer to do it. So I got all this great exposure to how publicly traded businesses operated, and it was at a CEO or board level. And so you mentioned Sarbanes-Oxley, you think about corporate reform, all the different things that were going on. I'd be in large corporate law firms, I'd be with big publicly traded companies, seeing how things moved, and it was always brought back to the movement of money. How do you earn your seat at the table? And so as I continued in my career, I wound up going to a tech company in DC. I worked there for about 7 years. I came back to bank director in 2010 when we were in the process of selling some assets to the New York Stock Exchange. So we had a brand, but really nothing underneath it. And that's where we started to build out a great team. And the team that is in place today is amazing. I stepped down as CEO 4 years ago so I could help go to Cornerstone Advisors, which is a consulting firm, to help grow and scale that business. I stayed invested in bank director, so full disclosure, like when your offices are here, bank director's corporate headquarters are right down the street. I'm still one of the investors and board members in that company, so you'll probably see me kicking around here when you least expect it. But I joined Cornerstone for the same reason I did bank director and the same reason I went to a tech company. It's like you see these intersections of opportunity happening, and you want to figure out how you can help people get a little bit smarter, maybe just a little bit faster. And so when you talk about looking over the horizon, there's so much that's taking place right now. And so I'm one of the partners at the firm. We're about 240 full-time employees, wholly focused on the financial sector. So I don't go in and do like contract negotiations or system selection work, payment strategy, but I do aggregate a lot of really interesting ideas and work with publicly traded companies, their boards on strategic plans. I do board facilitation. I'll work with private companies to figure out their go-to-market strategy. I'll see tech companies and try to help position them for success. I work with PE, so I see a lot of where the dollars are flowing. Kim mentioned, venture. We had some great relationships there, and so you become a jack of all trades, and you try to help people to connect the dots. And I think that's where you do a great job of surfacing some unconventional ideas at times, right? You've done, as a marketer, some really creative things that I always love to refer to when I'm talking to folks. I see what Kim's doing on the data front and just team building, and you realize the only thing that limits your possibilities is your own personal ambition.
Yeah.
And so you want to surround yourself with great people. You want to learn from them. And so showing a little humility in situations like this isn't always easy, but I just love being a part of this conversation with you two because you both bring something that I don't have. And that's how you learn from others.
Yeah.
The thing
Al, what town did you grow up in?
What town did I grow up in?
Yeah.
Needham.
I'm from Walpole.
Oh, Joe Morgan's town.
Well,
Former manager of the Red Sox in the 80s.
Oh, there you go.
and I grew up in Lexington, so we have that in common.
And I'm not connected to either.
You're not.
of you guys,
No.
sorry.
Well, no, I'm sorry, that was a very long-winded way of talking about this.
the thing that
But I too was an accidental banker. I mean,
I couldn't get a job offer. So, I wasn't even
were
accidental.
trying to
I
be a
was a
banker.
failed banker.
Well, I was a Latin American studies major in college, which a number of my
Buenos dias. ¿Cómo está, mi amigo?
Actually,
Dígame en español.
Bon dia, fellow Portuguese.
You're Portuguese. Yeah. Well,
but
won't work.
Sorry.
But my dream was to be a spy, with the CIA, and unfortunately, the CIA told me my GPA wasn't good enough, and.
Because that's what they test spies for, is their GPA.
But eventually, they do other things, but they got to start apparently with a high GPA.
Okay. See, I would take a low GPA or like a C student. If I was the CIA, I'd be like, you're doing just enough to pass, but you probably have some social skills that are keeping you from having a higher grade.
These were my arguments.
The C students will run the world because they know how to balance expectation and also getting out and being social.
Absolutely, and
as a C student,
and being social in college was one of my skill sets.
Oh, good for you.
So. Anyway, let's move on from that.
Where do you take this?
Yeah. Well,
where can we take this?
What I loved is you said in your early days, like you raised your hand.
Yep.
Whatever I can do. I did the same thing. And oftentimes, I try to, whenever I get the opportunity to, I'll go back to JMU and do a, symposium with the kids and with the students that are there. And that's always my message. Raise your hand. Take the initiative. Show up, right? Don't let somebody else step in front of you.
Yeah.
Well, I think
speak up.
Sometimes we forget the lessons learned the hard way, still have currency today. So when you don't say, yes, I'll try, or what if this works, as opposed to what if it fails?
Right.
What if this works, I'm going to give it a shot. if you stop doing that, like just because you did when you were younger, when you get older, you can still do the same
still have
thing.
to do it.
In fact, it's a little harder because you get comfortable, you have a little bit more creature comfort around you. You think you've got to figure it out, but I think getting out of your comfort zone is a big challenge. And I think from a leadership standpoint, that's where it's important to surround yourself with people that kind of pull you or nudge you or just encourage you to say, hey, just because it's been done this way in the past doesn't mean it has to be anymore.
Right.
But let's not ignore the lessons, the positive ones, because they still have merit.
It's interesting because that's one of the things in navigating innovation. For instance, we started in an innovation committee. We have an innovation officer, but we also have an innovation group. And I think in putting together that group and wanting to ensure that we were fostering creativity, one of the things that that we've discussed from a leadership standpoint is not in horrible ways or in dying into the sun kind of ways, but it's okay to take some risks and if we do something that ultimately isn't successful, it's okay, right? Just as I know that I think parents today struggle to let their kids fail. Mm-hmm. That's part of the process. And I think that bankers are risk averse, mm-hmm. and we have to be in a variety of ways. Right. But I think it's also banks need to be able to embrace when you're aspiring to innovation and evolving as this business really needs to. They need to give themselves some guardrails around doing things that aren't going to necessarily work or that you need to pivot from. And I think both of you are probably on a regular basis seeing that.
Yeah, I'm curious. Are you still seeing the hesitation around oftentimes? A lot of the banks that we talk to, they know they have pain, they know they need to solve it, but that risk, they're scared. It's just easier to not.
Yeah, I think, I see it. I think that some of the times the challenge is where do I begin? Right, mm-hmm. And we talk about data. There's a book that's been in circulation for a long time. It's called How to Lie with Statistics. Mm-hmm. And it's a clever title because it's actually all around why data is so important.
Right.
And how do you use critical thinking to see patterns and make smart decisions?
Yeah.
And so I'm marrying some of what you do with your question because it's not so much a lack of interest in trying to be better or to differentiate a brand or to find new earning streams. It's how do I start? Where do I begin? Recently I've been involved with a few conversations with folks who are really interested in what's happening with AI. They're looking at the different agents that they hear about, but they don't have anyone who's coming saying, I've built some AI agents that you can use. And the disconnect is they have an interest and they know this is important, but they don't know how to begin. And I think that's where then people get stifled and they get frustrated because, yes, you have to stay compliant. You can't get sideways with your regulator.
Right.
You have shareholders that expect certain returns at some point. And is this the type of activity that's going to help satisfy growth goals while also protecting a business? Not always. You can talk yourself out of things if you don't know where to begin.
Yeah. Yeah, and I'll say this, and it'll sound self-serving, but it truly is the fact, and I think you'll back me up on this. You can't have AI unless you have a strong data foundation. Yeah.
Well, I work for a consulting firm, so I have to say that because every consulting firm says it starts with your data.
But it does, right?
I have to be tongue-in-cheek though.
It does. I know. I have to. I
right?
feel that.
You're a CFO, and
you're
you're I need to have a clean sheet. I need to know where the money's moving. I need to know who our most profitable relationships are. The lifetime value of a customer is important to be able to see. Are we growing it? Are we losing? There's trends and patterns that you can't fake.
Right.
So data is fundamental. But we also have to laugh because if you go to any conference, it's like bingo for attendees. You've got to get your data in order.
Right.
How do I do that?
Yeah.
You've got to get your data in order. What data do I not have in order? I think you've got to be more prescriptive.
Yeah.
As a banker to understand where you're maybe coming up a bit short.
Right. No, I agree wholeheartedly. I see oftentimes, though, banks want to skip the hard work. Mm-hmm. The data foundation, it doesn't have to be hard necessarily. We try to make it easy. That's our thing, right? But they want to go buy the AI tool. They want to go right, because that's the new shiny new object, if you will. And you can't connect an AI tool that's going to do something with your data to not structured, clean, normalized data. It's not going to work.
I believe the phrase is garbage in, garbage out.
Exactly.
Well said.
Exactly.
Well, this is also where experience still matters. And one of the things that people forget is having that human in the loop really is less of a buzzword and more of an imperative, because I'll give this example. We have some great young employees that have joined us out of college, business school, high performers, very sophisticated when it comes to using these different technologies, because that's how they've grown up. Like, they've been on their phones, they've been doing things that does not come naturally for us. But what they don't have is industry perspective or understanding that,
instinct.
Hey, there's certain numbers that if you start with the wrong approach, everything else that follows is going to be incorrect.
Right.
And so I was asking two of our more talented ones to help me with a small project for banks between 10 billion and 30 billion in asset size. So I don't have my notebook here. I don't have the exact number, but it's a finite and addressable number.
Yeah.
In my mind, I know what it should be. They came back with this really detailed, report, but their starting point was incorrect. They had different banks that were not in that asset size that were skewing the results, but they didn't know that was the case because they don't know the names of the banks. They don't, know to dig it any deeper. So they just take on, faith that the initial output from a ChatGPT type search is going to help them with their following queries. Now, the follow-on prompts, spot on.
Yep.
And that's where I can learn and stay curious. But if you start with imperfect information, you can't deliver that to anyone. And so it just becomes a futile exercise that doesn't deliver any real results.
And it helps to have sort of that walking around sense of
and I think
knowledge
the
base.
technology is going to get, it'll catch up. So we can't just sit here and say, well, I know what happened with Enron, and that was a disaster, and here's what's going to happen for the next Enron type company.
Right.
No, that's history, and we all have to own and live it, and be able to apply it in our own ways. The technology, it will start to become more sophisticated. But right now, as bankers start to really get their arms around an opportunity to be more intentional, they shouldn't ignore the fact that they've gone through some pretty rigorous training programs.
Right.
That some other folks have not gone through. And don't shirk your kind of ownership of that knowledge base, thinking that the AI tools are going to somehow be complementary to what you already know.
Yeah. Well, and it's interesting, and I think that's a good segue to, I'm curious to hear from both of you as you have engagements with a variety of different banks. How would you characterize sort of the current level of adoption, if you will, and kind of the go forward with AI? And it's going to vary, obviously, but I know that in our own bank, it's development of our policy and strategy, and identifying sort of those those kind of key areas where we feel that AI has the greatest potential to reduce keystrokes and take more mundane tasks away from employees and just continue to lever our efficiency. But I'm kind of curious to see or to hear what you're seeing out there.
Yeah, so it's really interesting. We have our KlariVis Data and AI Institute, where we do summits, in Roanoke, Virginia, where we'll bring 30 to 40 bankers to town, 2 or 3 times a year, to have just great conversations. And last year we did 4 of them, actually. And every single one last year, one of our sessions was on this very thing: who's using AI, how are you using it, and just opening it up for conversation. Last year, Jim, maybe one banker in every one of those sessions would raise their hand and say, I'm experimenting with ChatGPT. Maybe one, okay? Which we were kind of surprised by at that stage. We were very surprised by it. Because these were bankers that either were clients of ours, so they definitely are forward thinking and they're progressive. They understand, technology. They fit that profile, but very few of them were experimenting with ChatGPT. now, today, we're having more and more conversations. It's a conversation always whenever we're talking to any bank, because they want to know how we're leveraging AI, right? And are we going to be the partner that's going to help them do more with AI and be able to take advantage of AI? And so what we're hearing is that their policies and procedures, most banks seem like that they have some type of an AI tool that they're loading their policies in and leveraging a technology for that. We have a couple of banks that are doing some really interesting things, but by and large, I think they're experimenting with ChatGPT still, and I think more people are experimenting with it, but not in the bank. It's on personal devices. Like they're still not making it accessible necessarily. The ones that are using Copilot because they trust it.
Yeah.
Because of the Microsoft ecosystem, and so they're trusting
And
that it's
that's
locked in.
That's what we're primarily utilizing today.
So that's kind of it's. I think more people are doing it today than they were a year ago. I still don't think it's there's a lot of banks that are not at all. What are you hearing? Are you the same?
So there's a lot going on, right?
Yeah.
And it depends on who you're talking to.
It
So
does.
The larger banks are like
Yes.
way down
Yes.
the path on this. I mean, Morgan Stanley's been doing some really robust things. Obviously, we all know about Jamie Dimon and JP Morgan and their spend and how massive that is. But I think what's helpful from a banker standpoint is sometimes to pause and say, just because we can do something doesn't mean we should do it.
Yeah.
Right? This is like the classic strategic planning. What do we not want to do? Let's get that out of the way first so that we can really focus on what we do want to. So when I think about the tools that are becoming more commercially available and viable, you almost have to break them into three categories, right? You have the hype and what's getting everyone talking and everyone's attention. And so today that's, agentic, commerce, agents, but that's not all of AI. Like we've had machine learning, we've had other, things before.
Yep.
So AI is too broad, but the hype right now is on the, agentic front. Then you have the hope, really what is it that Jim, as the CEO of the bank, hopes could happen to get those hands on keyboards, taken down? How do we create some efficiencies so that I can redirect that spend into something more impactful for my delivery or for my customers, or maybe I am hiring differently. And then there's the happening, what's really hitting at the moment. And on the AI front, we have to be intentional about what we're talking about and how we're defining things. Because even generative AI has been around for a while. When I think about contract reviews and things that legal documents being sucked into big systems, that's been taking place at larger institutions and big companies for years now. So for compliance purposes, for just standard T's and C's, there are ways that this is already being used every single day.
Yeah.
So it really becomes more important for the individual organization to say, if I'm a $2 billion bank, where do I have hype that I need to pay attention to because it's important? You don't want to ignore the things that are coming, but maybe it's not important, maybe it's interesting. Maybe that's how I would define it. It's there's some interesting things that we can't ignore, but we're not going to move on them right now. There's the hope, and that's, again, from a leadership standpoint, what do you aspire to do? And then look at the relationships you already have and figure out, are they doing something there? Because you're not going to build it on your own.
Right.
If KlariVis is doing something, why would you not further invest in their R&D efforts? Because it's going to come back and benefit you faster than anything you could do, individually. And then the happening stuff, there are things that you just described. Using ChatGPT, using Copilot, using Fathom for note-taking, Otter AI for voice transcription. I mean, there's things that are individual tools, but you start to scale them across the enterprise. That's where it gets interesting, because you have to start with the individual being curious, but then have some folks within the organization that can say, we can't just do this as a one-off, experiment. If we're going to do it, we have to make it available for everyone, with the caveat that not every banker should be asked to become an AI expert.
Yeah.
Right? If we have that expectation, we're dooming people to fail.
Right.
But if we're giving them the right tools, well, any good banker is going to say, if you give me the right tools, I can do my job faster and better. And so that's kind of how I interpret your question, without being hyper specific on one area of the bank that's being impacted.
No, I appreciate that, and I do think that a couple of things that I would underscore that I think you pointed out that like you don't have to on this one, particularly community banks, don't have to be first.
Nope.
That's right.
Like I mean, this is going to move relatively fast, and so I think again, I think that's why it's so important that banks be embracing the development of how they're going to do it, right? Establishing from a culture internally that like we're going to do this, as opposed to being a bank CEO that may say we're never going to do AI.
Right.
Like I don't know if that
But there's
anybody would ever say that. But anyway,
Yeah.
but I also think that and this has really sort of been something that I have been sharing with my peers and internally is to say like for community banks, this is find the right partners, like because the iterations of trying to do. I mean, we can all do some things with ChatGPT.
But Jim, this is where I think that it's a good moment to like say timeout. You've already invested in all these companies that are putting a ton of intellectual horsepower against like specific business issues. Like,
Yep.
Again, you were a CFO. You're not going to take a meeting with somebody unless they can help you solve a very specific problem.
Right.
At least that's how I assume
Sure.
you would manage your calendar. I would assume the same for you. Like the amount of solicitations that are coming through that are really world class because some AI agent has helped with the sales technique means you need a warm body to have it be credible. The warm body for banks are the people you've already invested in.
Yep.
And this is why a return on technology becomes such an important board level conversation. Because when you think about your expense profile, people will be number one, and then tech is going to be number two. And within the tech spend, I think the noisiest part is going to be on the AI front, because everyone's saying, well, we have to do this.
Yeah.
But if you were to step back and talk to not just your core, but to companies like Kim's to say, help me understand where you're investing. Maybe not where you're already in production or implemented, but what are you building towards?
Right.
What do you think is realistic for us to do together? Because again, there's a network effect. If those initial 6 banks were to say it worked once, I want to do this again, all of a sudden you're scaling faster than you can individually. And so instead of, it's not to take away from the companies that are doing some really great things, but I would start with your current house and say, are we getting the maximum value from our relationships? If not, does that mean that we're in the wrong relationship? Or have we not asked the right questions, or are we not using the right features and functionality that is already available to us?
Right.
And so then it turns into a process conversation more than it is a technical one, because if your processes aren't allowing you to engage in meaningful ways, how are you going to organizationally change?
Yeah, and on sodium pentothal, I think that's that's the truth serum drug. Most banks would admit that they are only utilizing a fraction of the resources that they currently are paying for in terms of different software solutions. So I think that your point is a really, really good one there.
Well, and I love the ask your vendors what they're doing, ask your partners what they're investing in, because that's the conversation we have with every bank that we're talking to, not only with our clients, but with our prospects, right? Here's the, and I hate using the proverbial term of roadmap, right?
But it's important to use it, right?
But it is. And here's where we're headed over the next 12 to 18 months. And at these data summits that we do, we play a game. We play a KlariVis Bucks game where we give everybody in the audience bucks, and we're like, here's the 6 things that are on our priority list. What do you think we should invest? Where would you put your money? Yeah. And it is so awesome to see. It typically all culminates, right, to 1 or 2 major things that they're wanting to do.
The wisdom of the crowd shows up, and you're able to then affect
and that
change
helps
faster.
Us. Exactly, and that's what we lean into. We do want to solve very specific business cases. You could boil the ocean with data, right? We've been hearing that, like big data, right? The way we approached it from that banker's perspective was solving some very specific use cases for Jim and for his CFO and for his chief banking officer and his head of lending. Right, very specific use cases. The same thing applies with any solution that you should be buying. But you do want to make sure that the company that you're partnering with is investing.
Correct. And I want to know. I would say selfishly, I'd want to know
what they're
investing in. Like
exactly.
I want to see the percentage of money that's being applied to R&D.
Yeah.
Is it expanding year over year? and then where are they making their bets? Because they have responsibility to shareholders
That's
and
right.
investors as well.
Yep.
And so you start to follow the money, and you realize you can get smarter by just removing yourself from your day-to-day to figure out, okay, if these companies are all putting big bets over here, why are they doing that?
Right.
What's the return that they expect? And am I going to miss something by sitting idle on the sideline? The other thing you mentioned about the quote roadmap that we don't have to talk about is it ties back into your planning. You shouldn't have
Right.
a strategic plan that lives on a shelf and gets taken down once in a while. That has to become more of a living document
Right.
where it's work and it's responsibility, but from a leadership standpoint, you want to be aware of market forces that are impacting your customers, not just the bank.
Yeah.
And so if you can, again, look at their success as a bellwether for yours, looking out and saying, hey, these industries are being impacted fast. What about it could we help them with? Because everyone's looking for advice and guidance and suggestions as to how do they stay relevant, if not competitive.
Yep. Yeah, I think that relevancy, I taught I'm gonna come back to relevancy, but last week I was asked to teach a group of high school students about the banking system. And by the way, I used Copilot to develop a PowerPoint, which was saved an enormous amount of time and put together fairly quality work. Now I would say because it uses a scan of the internet universe on topics, it was interesting to see what I would consider a level of negative bias around the banking industry that came into and I had to tell it
You're wrong.
well,
Did you apologize when you said this? Did you say, please redo this? Or
No.
because you're afraid that it's
I used to say please and thank you. I don't anymore. Now I'm just like, you got this wrong.
I'm concerned. I'm sticking with the please do something because I don't want it to ever think that I was rude.
Think that you were not nice.
Self-preservation is
Yeah,
important.
there you go.
Yeah, but anyway, it was a learning experience, for me. Not that it was the first time I'd ever used it, but in terms of developing a larger document, it was kind of interesting to sort of see that happen, and again. Back to your point earlier about the example you had about your younger employees not knowing what they don't know. Like, what I know about the banking industry is what I needed to be able to get this to be a kind of more objective presentation, which was a little bit scary. But my point was, I was talking about the importance, and I think one of the things that makes the banking system in the United States great relative to our peers around the globe is the community banking aspect. The industrialized world outside of the United States has sort of manifested in a handful of big banks, and they don't have what we have in terms of being able to support entrepreneurs and small business growth in this country. So I'm a fierce advocate for that because I see it in what I do daily, right? I'm going to leave here and go with one of our relationship managers, go visit a prospective client, and help them hopefully help enable some dreams there for growing an enterprise. And it's one of the things that I enjoy most about what I do, and I also think it's one of the most important things that we do as an economy. However, I'm concerned. I'm concerned about relevancy of community bank business model and the challenges / opportunities as I think we would want to see them, but the necessity of this industry evolving is not new, but it's seemingly accelerating. It has been. I think that's true over time.
I think we're feeling different pressures today.
Yeah.
And we're having a hard time getting our arms around how do we show that we're the right stewards of capital. Like how we earned our independence.
Yes.
Right. But But go back a few years when Walmart was considered the sleeping giant because they had this proverbial branch network that could be activated that could really take a lot of community banks and put them into the obsolete bucket. Like, that didn't happen. I think bankers are resilient and they can be opportunistic, but I think we have to be more aware as being hyper-focused and niche-oriented as to where we're going to compete and how we're going to potentially win. And this circles all the way back to Kim's conversation about data and understanding what you have and what you don't. Because the more prescriptive you can be, and the more, out on your front foot you're willing to go, the better you're going to earn people's trust. And so trust in the digital world is different than it used to be. But I think bankers are becoming more familiar with how to navigate those expectations. And so when you can marry the high touch, which you're doing, with some high tech, because the cost for technology is coming down fairly dramatically.
Yes.
And you could make the case that technology once differentiated companies. It's no longer a characteristic or a feature that you can hang your hat on.
Right.
So now it's about performance and execution and discipline. And I think smaller organizations can do that far better because they can lock arms as a team and say, we know exactly who we're working with. And by extension, who we're not working with. And you see some of these larger banks as they're dropping branches, those are great billboards for them. Doesn't mean they're going to stay forever. But if you've been in the community for 15, 20, 30, 50 years and you've earned people's trust, they're not going to be chasing rates when something moves once.
Yep.
So I'm still bullish on the future of the community bank space because we don't need to just go to the Canadian model of having like a handful of big providers.
Be horrible.
But it is still going to be a challenge, and we can't just say, well, people want us to be successful, so we will. That's where are you going to be able to win in the niches becomes such an important conversation. And winning in the niches requires knowing exactly who you're trying to earn a relationship with.
Yeah, I couldn't agree more. I think the need for our serving those needs in our communities is there, and that doesn't go away. Where the concerns I have are where organizations are not embracing that transition from once upon a time you were able to compete in a very broad spectrum. Business models were all very similar, right? Well, we know that you don't need to be leaning into the highly commoditized lines of businesses. Those are going to be you're going to be hard to compete against the gig economy there. So I come back to your point, niches. I mean, that's a big part of what we do in our organization.
Well, you think about business models. Think of how many banks had a build to sell mindset.
Yeah.
Right. And so it wasn't let's build something of that's durable with longevity behind it. It's let's show the quick wins so that we can flip this into a healthy sale.
Yeah.
I think we all know, as much as bank M&A is a frequent conversation, it's not because you have these de novos who, in 5 years have been able to grow and scale and exit at a healthy valuation. So looking at the business models that exist right now, there's all different flavors of them. Some are more sophisticated, some take more risks, some are more traditional, and that's great. We need to have this capitalistic society of ours with options, right? And I think as much as our economy gets driven by a handful of big players, we talk K-shaped economy and who's doing things. Pendulums always swing, and entrepreneurs have made this country great, and will continue to make the country great. And so who's going to support them? Is it going to be a B of A or a JP Morgan who's going to have their algorithm that runs, and before they even have a conversation will have qualified if this is a good bet or not? Or is it going to be somebody like you who's driving up and down 65, stuck in traffic at different points, knows where to avoid, takes the side roads, talks to the high schoolers, is building the community where there's recognition and currency to the bank's reputation? I get very, excited to think that there is a future for banks that are willing to, take a slightly bolder approach to things.
Yeah, no, I totally agree with you. And look, I travel a lot, right? I'm on the road a lot. You're on the road a lot, right? In the air, on the road. You can tell a community that doesn't have a community bank.
Yeah.
it looks so different than the community with a community bank or two community banks in it. They're two totally different pictures.
Yeah.
It's just profound, I think. And so, the worst thing that could ever happen in this country is for us to end up with 5, mega banks. I 100%. It's why I do what I do. I feel like that, when I was a community banker, we were a commercial bank. C&I, we worked with the small businesses in our community. I was one of those. I was one of those small businesses, working with an entrepreneur. I love that. I love that. Now I feel like I get to have that impact across the whole country.
Yeah.
And so that's the coolest thing for me, right? It's so cool. I get to sit down with cool bankers like you and have a fun conversation. And anyway, it's just so impactful. And I agree. I'm as bullish as you are on the community banking model and what's happening, and that those banks that want to be successful and want to, lean into that franchise, they don't have that build to sell mentality. I think that there's a place for that in the community. I think there are some threats, obviously, that we haven't been had to deal with before, right? So you've seen me take a pretty strong. I'm not an anti-crypto person, right? But I do not think that Coinbase should be paying interest and rewards on deposits that they hold. I do not think that they should. Right. And so that is a threat to the business model. And I don't know where that legislation is going to end up. But I can tell you, we did the analysis on our banks. We serve today over 150 banks, and we looked at the transactions. 9 out of every 10 community banks already have customers transacting with Coinbase.
And I think that's the risk that people aren't talking about. Like, even if you're not involved, you're going to have exposure. You're going to have
exposure, and they don't even know it. And now the thing that we learned is that for every $2.77 that left, only $1 came back. Yeah. So when you talk about the impact of that particular legislation to lending in community banking, it is going to have an impact if it happens. People are projecting that the stablecoin market is going to grow to $3 trillion in the next 5 years. Where's that going to come from?
Yeah, no, it's a challenge, and one of the things that's really frustrating. And I was in D.C. About a month ago, and having a conversation with a member of Congress who I won't name, but and it was the frustrating part was that the dialogue was around there that almost like there was some sort of moral equivalency between the banking system and this crypto world. And it's kind of like, I kind of, and I did say this, and I hope I wasn't like completely disrespectful, but I wanted to say, like, all right, what has the banking system done for this country in its history? And what has the crypto industry done for this country in its history? Like, apart from like coming up with something cool that we don't really know who invented and like helps enable ransomware and sex slavery and all kinds of horrible stuff. Like help me with this.
Right. Well, I don't know how to follow that.
And cut.
But we'll leave it in so that we can figure out how we take this. Jim, what you're saying, I want to parse one little thing out, because when we're talking stablecoin, where I think crypto, I think they're separate.
Yeah.
Like, I would say.
But they are like, they're sort of locking arms today in Congress.
They are
in DC.
But I think it's important, again, like words.
We're not against good technology.
Yeah. Well, right.
But words matter, right? And so if we're going to think about stablecoin and we're going to think about practical applications. Yeah. If you're thinking cross-border transactions,
absolutely.
Yes, like the settlement, like the process, the traceability, that is a massively important investment that's being made. Now, where does a bank participate? That's on an individual bank basis. Yeah. On the crypto front, when you think about the speculative coins that are being minted and how people are running up, big bets to like cash out, and have the suckers, this is the casinos all over again.
Yeah, it is.
And so, where we've got to be really intentional is,
at least at a casino, the scrape is like 2%.
I don't know what casino you go to, but you think about the movement of money just broadly, and we live in this industry. People who don't are going to be seduced by the ability to make money fast.
That's right.
To be able to send money fast. And we have the ability right now to send, real-time payments, but the adoption hasn't followed the technical infrastructure that is in place. So we're allowing others to say, well, we can move money faster. Kim and I were at the same event yesterday, and I was making a point on the stage that my concern for a community bank that is most likely commercially oriented is a CFO comes into you one day and says, hey, I can move like $10 million in real time using this alternative service. And they've already done it and they've had a good experience.
Yeah.
So you have a relationship, but I think like their deposits are going to follow their money. So no matter how strong you have, and they've come in and told you that they're moving it, but they haven't even given you the chance.
Yep.
And I think that's one of those things that we have to be aware of is what's the reputation, what's the perceived, ability to deliver that our customers think of us about. Because the messaging is really sophisticated when you look at these tech companies that are getting funded and they're running a PE playbook where in year one, it's big investment in sales, marketing, let's grow market share at all costs. We're not going to worry about profitability because we're going to start to get really lean and mean and cut expenses in year 2, 3, and 4 so that we can have an exit by year 5, 6 at the latest. That's a different way of running a business than you're running.
Right. Absolutely.
And that's where again we have different scenarios that we have to account for that are not hypothetical, they're real.
So why do you think real-time payments haven't taken off with banks?
It's a good question. It's
the risk aversion, right?
I think so.
It's the risk aversion.
Right. So what is it? Everyone wants to receive, nobody wants to send.
Yes.
Right.
Isn't
because
that
they're
the problem?
terrified to send.
Yeah.
Right.
Because of the risk.
Correct.
What if it's not correct? What if it's a scam?
But I'll receive. I'll receive.
I guess the phrase is speed kills. At least that's the thought process. So.
But I think it's a great point. At some point, at some moment, we have to appreciate the sophistication of the technology, the fact that not participating is a decision.
Yeah.
And you think you're going to be able to come back, but somebody else has taken a first mover advantage, and this is where community banks not being on the bleeding edge does come back to bite them. You don't have to be a fast follower, but you can't be living at the end of the tail, right? It can't be that I'm going to let 4,000 other banks prove that this works before I decide, well, now it's safe for me.
Right.
And there were probably, banks that, and it's not the same thing, but in terms of sort of things that just get adopted, right? Like there were probably plenty of bankers a number of years ago that were like, Venmo will just be for kids.
Right.
Right. Well, we now know it's not.
Right.
Right. And so I do think that, we need to be, cognizant of what's coming. Now, from a public policy standpoint, it is a challenge. It's a challenge politically, unfortunately. But it's also one of those, one of the concerns I have is that even a number of really smart people I know that still don't understand sort of this idea that you take $1 of deposits and get it into, move it into stablecoin. To your point, fractionally it's not coming back, but that also just pulls $1 of loans off the street.
Right.
And I don't think from a public policy standpoint that enough people realize this. This is not a us versus the digital asset, debate. This is it's the economy, stupid.
Yeah.
Well, that's where you walk into bank boardrooms and you start into these conversations around what's our funding model, right? And it's amazing when somebody's